miner revenues hit 2023 lows after recent Bitcoin halving. On April 20th, the Bitcoin network experienced the highly anticipated halving event, which halved the reward for mining a block, causing miner revenues to plummet to 14-month lows. Besides the halving, the decline in the first cryptocurrency's price also contributed to the reduction in miner earnings, with Bitcoin currently trading around $57,000. Despite these challenges, Bitcoin miners appear undeterred. Ki-Young Ju, CEO of the analytics platform CryptoQuant, noted that miners now face a crucial decision following the halving, limited to two options: liquidate all their assets now or wait for Bitcoin's value to increase. According to Ju, miner revenues have reverted to levels seen at the beginning of 2023. Yet, he emphasizes that so far, Bitcoin miners have shown no signs of capitulation. Capitulation usually occurs when miners cannot cover operational costs and are forced to sell assets, leading to a further drop in the Bitcoin price. Currently, however, miners are betting on a future recovery in prices. This perspective is supported by analysis of the Puell multiple, a metric that reflects long-term BTC market cycles based on miner profitability. Bitcoin volatility decreases as it matures. According to a study by Zach Wainwright of Fidelity Digital Assets, Bitcoin, BTC, is showing signs of decreased volatility as it matures. Wainwright's analysis reveals that as of early 2024, Bitcoin's volatility was lower than that of 33 stocks in the S&P 500, challenging the traditional view of BTC as an extremely unstable asset. Moreover, over the last 2 years, Bitcoin has exhibited less price fluctuation than shares of Netflix. While the leading cryptocurrency remains volatile, its stability is increasing compared to some widely held traditional stocks. Wainwright also noted a historical comparison, pointing out that after the US dollar was decoupled from gold and when US citizens were once again allowed to own it, the price of gold rapidly increased along with inflation, and its volatility surged by more than 80%. This is nearly twice the volatility of Bitcoin in April 2024, added Wainwright. U.S. prosecutors conduct investigation at Jack Dorsey's block. Federal prosecutors in the United States are scrutinizing the financial operations of fintech startup Block, owned by Jack Dorsey. According to NBC News, 2 former employees of Block have released documents detailing numerous compliance breaches at Square and Cash App, both payment systems under Dorsey's project. It is alleged that the Square and Cash App divisions have been processing transactions for users in sanctioned countries for many years, including Cuba, Iran, Russia, and Venezuela. Moreover, the payment services are accused of facilitating cryptocurrency transactions for terrorist groups. According to a source cited by the publication, the questionable transactions primarily involved credit cards, fiat currencies, and Bitcoin. None of these were reported to the government by Block representatives, although required by regulations. The startup had been previously warned about numerous violations. However, no corrective actions were taken at Block. From the beginning, the compliance department was far from perfect. It's run by people who should not be in charge of a compliance program, one former employee emphasized. Edward Siddle, a former lawyer at the U.S. Securities and Exchange Commission, SEC, noted that the Block's management and board of directors were aware of the compliance breaches. In a statement to the media, representatives from Block stressed that they regularly conduct customer compliance reviews and adapt them to the current sanctions regulatory environment. We have been and remain committed to further developing this practice, as well as continuing to invest significant resources into our compliance program, they added. The payment system Cash App was launched in 2013. It allows users to instantly send and receive fiat, as well as purchase stocks in Bitcoin. Reports suggest the service has around 56 million active transaction accounts. In late January of this year, Block conducted extensive layoffs, cutting over 1,000 employees in a single day. FTX Estate initiates third round of sales as Solana rises 11% in a day. Over the last 24 hours, Solana has seen a price increase of more than 11%, coinciding with the commencement of FTX Estate's third round of SOL token sales. This surge has helped boost the cryptocurrency's market capitalization by 9.14%, reaching $59,414,082,134 and securing its position as the fifth largest crypto asset. Coincidentally, during the same period, Bitcoin's price successfully breached the $59,000 mark, testing the support band indicator of the bull market. FTX Estate's ongoing SOL token sale entered its third phase on May 1st. The recent auction, which concluded with the sale of 1.8 million SOL tokens, brought in approximately $232 million for the liquidators. According to Block, bids in this round were successful between $85 and $110 per token, with bids under $85 being rejected. The majority of tokens were sold at $95, a 26% discount, while their market value stood at $110. The specified discount reflects the locked nature of the tokens, which have limited trading availability. The locked tokens purchased in these auctions are subject to a 4-year transition period of ownership rights. Notable investment firms such as Galaxy Trading and Pantera Capital were participants in the second round of the auction. Binance aids Indian authorities in recovering stolen cryptocurrencies. According to information released by Indian law enforcement, the creators of a fraudulent scheme disguised it as a gaming platform. The platform, named eNugget, offered participants the opportunity to quickly earn from cryptocurrency investments. Instead of the promised profits, eNugget's clients found themselves unable to access their accounts on the platform, resulting in the loss of their funds. To track down the stolen assets, the Enforcement Directorate, ED, enlisted the expertise of the cryptocurrency exchange Binance. With Binance's assistance, investigators identified the criminals' cryptocurrency wallets linked to several exchanges. The fraudsters had used dozens of accounts to store the stolen coins. Once the perpetrators' wallets were located, they were blocked, and the funds were transferred to an official address owned by the authorities. The assets and accounts of the criminals were seized, totaling $19 million. ED representatives noted that the eNugget platform had been under investigation for 2 years, during which investigators uncovered several thousand fictitious bank accounts holding over $2 million. Tether blocks over $1 billion in USDT on crypto wallets. Following the November 2017 incident in which an unknown hacker stole over $30 million in USDT stablecoins from the Tether Treasury wallet, Tether, the issuer of these stablecoins, announced the release of a new version of the OmniCore software client capable of freezing assets and transactions from blacklisted crypto wallets. In December 2023, Tether announced an update to its freezing policy. Since then, the company has been actively blocking access to USDT for holders whose wallets appear on the U.S. Sanctions List, SDN, with oversight provided by the Office of Foreign Assets Control, OFAC. This strategic decision aligns with our unwavering commitment to maintaining the highest standards of security for our global ecosystem and facilitates the expansion of close working relationships with global law enforcement and regulatory bodies, Tether stated. Sources at Hashtelegraph believe that the issuer's blocking of USDT violates the fundamental principles of decentralization and cryptocurrency freedom, essentially amounting to extrajudicial confiscation of funds. However, fighting this is impossible, as Tether has absolute control over both the issuance and circulation of USDT stablecoins, a power enshrined in the user agreement with crypto asset holders. Tether may, at its sole discretion, seize your property and transfer it to any government, law enforcement, or other entity, when circumstances require, states the service agreement. New York prosecutors accuse crypto businessman of defrauding investors of $43 million. According to U.S. law enforcement, Aydin Delpour orchestrated and managed a pyramid scheme from approximately 2022 to April 2024. Investigative authorities found that over these 2 years, Delpour solicited more than $43 million from investors both in the U.S. and abroad, promising high returns from a business operation. Instead of using the investors' funds as promised to support a hotel enterprise in Las Vegas and to trade digital assets, Delpour illegally appropriated the money. He paid interest income to early crypto investors using the contributions of later investors, the Manhattan District Attorney's Office stated in the indictment. Nigerian court postpones hearing in Binance cryptocurrency exchange case. A Nigerian court has deferred the hearing of a case involving the cryptocurrency exchange Binance. Binance's lawyer raised concerns about the prosecution's failure to timely provide evidence that could be used to prepare for the hearing. The court allowed Binance's attorney to review over 300 pages of new charging documents and agreed to postpone the proceedings. In addition to the money laundering charges brought by Nigeria's Economic and Financial Crimes Commission (EFCC) against Binance and its executives, authorities have also levied separate charges of tax evasion, which are being handled in a distinct judicial process.